Welcome to Nerd Stock Talk. This is our Saturday evening show. So those that watch this or listen to it later can always be able to join in with us live. We record at 8 p.m. Saturdays, where we talk about what happened over the week and we talk about what our predictions are for the week to come. So, and with us in the studio we have Mike and we have JP. I would say, JP is the one with the beard, but they both have beards. So JP is the one with the glasses and the beard, and Mike is the one without the glasses. So.
Well, and the weird thing is that JP is the youngest among us, and he's got the grayest beard.
Yeah, see?
Those are wisdom whiskers.
Wisdom whiskers. Right.
So, as I said, we got a tight show, and I know we talked. So, what we're going to do first, we're going to go over our picks we had last week and see how they did. Then we're going to talk about our feature segment of basically, we didn't predict the Wall Street versus Reddit, but we did predict the GameStop stocks surging, and we'll show that. And then we'll end the show with what our predictions are for the week to come, the week of February 1st. So, but first, we'll hand it over to Mike. So let's look at what your predictions were. So let's look at this. So Mike, your predictions, and we'll put it on the screen below. Mike predicts. Mike was GM. GM ended up for the week down 7 and about almost 8%.
Yeah.
GameStop had a whopping 222% increase from over the week, and we'll talk about it in our feature segment. So there's plenty of things to talk about with that. So
the GameStop story we're going to talk about, but I find the GM story really interesting that it didn't do anything. I'd like to be all braggish and be like, I totally knew they were going to announce this thing about electric vehicles, but I totally didn't. I just kind of knew that they had a bunch of EV moves, and they just sort of said last week, they were like, hey, by 2035, we're going to have no gas-powered vehicles. So I'm really actually surprised that they went down. I thought that they
It's notable that the stock market dropped 600 points on Friday.
Yeah. So it's kind of like everything. Everything hit the pooper. And let's move on to JP, and then JP can tell us why the rest of the stock market went down the turlet, as my granddad would say.
All right. Yeah. And so, JP, your picks was Senseonics, which was down 16%, almost 17%, and Bed Bath & Beyond, which was going to be one of those short sells.
It's still going to pop. It's still going to go.
Think it's going to pop? Okay.
Both of those I think are Senseonics, I guess, is going to be a longer term play. We got to wait for some positive news about them. But
it's like what, less than $3 a share still. So
yeah. But I think this is a reflection of the broader market more than the stocks themselves. When the stock market drops 3%, it's hard for anything to show any gains.
Peloton went down last week, and that's like one of the most ridiculously profitable companies in the world right now. So that's like they went down like 8% or something dumb like that. So It's crazy.
And I just want to say my last week's switch was Ideanomics, and it was up a whopping almost 2.5%. So, but really? it's tied into
my GameStop pick was the winner.
Well, I mean, that was easy. We talked about GameStop the whole time anyway, so you just kind of like that was a good horse to bet on for that one. But so hey, let's talk about this. So this, we started this program not knowing that the stock market was going to be such a big topic of discussion.
Right.
Over the last this last week was when it really hit, and you guys called it. You called it last week, saying this is going to be fun to watch, and talking about having fun. We didn't know the politics behind this, so talk a bit about you guys. What was going on with the day traders, and you did mention that the Wall Street Bets, the subreddit, was telling people that this is gonna this is something to watch out for. But did we expect such a viral reaction from Wall Street because of this?
Oh, for sure. Yeah. I mean, so these billionaires who've essentially controlled all money for the last several hundred years are not just going to like sit back and be like, you got us, guys. You picked our pocket. Here you go. Here are our billions. No, they're going to lie, cheat, and steal like they always do. I mean, big finance is a pile of scumbags. They're a wretched hive of scum and villainy. That's why I don't mind that, you know, the little guys are essentially robbing them blind. But
I think you touched into the vein of the sentiment around this whole thing. I didn't expect this move to become the viral political statement that it's become. That was a bit of a surprise.
AOC and Ted Cruz agree, as does Ben Shapiro. Like
it's
the end of days.
It's a, I don't know. It's a statement. This sort of thing is what crashed the economy in 2008, and now with the speed of information and the free flow of information we have, people are able, average everyday people. One thing we didn't have in 2008 was these trading apps that allow for commission-free trading, and more importantly, and this will probably come up later in our discussion, but the ability to buy fractional shares, which has been an important feature of this whole movement, recently shut off by many brokerages for liquidity reasons. But the ability to buy fractional shares has allowed the little people to buy into this. And what they've done is they found a list of the most highly shorted stocks. And now we have sort of activist investors occupying Wall Street, so to speak, buying all the shares of these shorted stocks and causing the bleed out of these hedge funds that have shorted these stocks.
So do you see this happening now that you know these subreddits and you, as you say, these activist investors figured out how to increase these short funded stocks, these shorted stocks, to their benefit? Is this now going to be?
Yeah, big shorts are no longer safe at all. Like, you can't short a lot. I mean, shorting will still be a strategy, but you got to spread it around. So the advice that the financial professionals have been giving all of us for years is make sure you diversify, peasant. And now they got to take their own advice, because if they put all their shorts somewhere, then it's public information. The rest of us are going to be like, haha, there's some more money that we can lay our hands on. And what's crazy is I've already started seeing, like, when it's always, you know, old white men because they're evil, but old white men who are rich come on to the NBC or some other place, and they're like, these retail investors are stupid and you know, sharing of wealth is complete garbage. Well, and then the next thing, people are like, hey, what's he got for his short positions? Because, you know, let's go blast that out. It's just like, whoa, slow down, rich white man. Stop messing with the little guy or you're going to get hurt.
So as you said, you don't think that it's like I said, through these activist investors that are doing this, and do you see, I guess, well, you know, what's my question is, like, is this going to be like the genie's out of the bottle? Like, this is
a movement?
Yeah.
It seems to be that way. Everybody's targeting the most highly shorted stocks. And shorting is a controversial practice among Wall Street anyway, and it's something that caused the crash of 2008 and should be outlawed, in my opinion. It's the ability for someone to sell a stock that they don't own for today's price sometime in the future. And that right to do that, the contract that enables someone to do that, can be resold. So then you have 2 to 3 to 4 contracts out on the same share, which really causes problems when things don't go as planned, as we can see here. And this is a loophole that the internet is exploiting, and it's awesome. This is probably the biggest transfer of wealth downward that we'll experience in our generation, if not 2 generations.
So then, I guess my question is like, if this was public knowledge, and I guess, why did it take retail investors so long to exploit this loophole?
Well, this is a very GameStop. This situation's never happened before.
Okay.
Yeah.
The extent to which the share has been shorted is unprecedented, and it's the extent to which it's been shorted by one firm, no less. So this is really the combination of that, the combination of the fact that GameStop had been shorted so heavily that it drove the price down artificially. If GameStop was trading at the same level as Chewy.com, who board member Ryan Cohen founded, it would be trading at $240 because, based on the similar financials. So the notion that GameStop is extremely undervalued really doesn't hold any water. It was driven down to like $4, and then it had some serious shorts put out on it, and then it had some positive news, which really aligned the stars, so to speak, to make this short situation happen. It's got 70 million shares out shorted and only 50 million shares available, and everybody in the world has now bought those shares. So there's no available shares to cover the shorts.
Well, but I think that's only part of it, right? So I think that there is absolutely the business case. There is the business case, right? But there's also the emotional case. And when I look at buying stocks, when I look at buying these things, I don't always think about necessarily the business case. I don't care how healthy that business is. It doesn't matter how healthy the business is. What matters is how healthy other people think the business is, and what kind of an emotional attachment they have to it. And I think with GameStop, there's a huge emotional attachment to GameStop. Right?
I think that's fueling it. I think people saw what happened to Toys R Us and got a little perturbed about that, and I think they have some nostalgia for GameStop and don't want to see that happen. But really, the only fundamental that matters right now with GameStop is supply and demand. That's what is driving the price of the stock. Pure supply and demand.
I like GameStop though. I think that with Ryan Cohen, it's actually. I think that if they listen to him, it's going to be a fantastic company. Right?
Yeah, I think GameStop's a $50 share. Yeah, it's not it's not a $10,000 share like it's about to be.
So you think
it sells though, JP? I was like, okay, fine. I upped them to $5,000 a pop, so we'll see.
So I want to be clear. When we did this live stream last Saturday, it was the GameStop was at $34 a share. It is now at $222 a share. No, $314 a share. Sorry.
So 314.
So it's do you think it's going to keep going higher?
It is, yeah. Where it's going to go is tough to call. What we do know, a short squeeze like this has only happened a handful of times in all of the history of the stock market. The most recent one was Volkswagen in 2008. And when it happened with Volkswagen became the most valuable company on the stock market for about 20 minutes before it started crashing. This pop is not going to last very long, and there's probably going to be some bag holders. But by and large, just to the way the math works, the bag holders are going to be the hedge funds, not the little guy buying into this right now. Just because of the time it takes for them to get out. Right now, the days to cover, which is the amount of time it would take to unwind those short sale positions based on the volume of shares available and the volume of shares that get bought and sold in a day, it's 6 days. So once those shares start to cover, which should start happening Monday, we'll see another spike. And I'm sure first thing in the morning when the bell opens, you're going to see a lot of drilling down with a short ladder. What that is they sell shares back and forth to each other with computers really quickly. And it's only a few shares, but it makes the price go down. And if you notice the volume charts, you'll see that those prices dropped really, really far, really fast without any real number of sales happening. And that's because everyone's holding their shares. So the hedge funds are selling the shares they have back and forth between each other to get the price to go down to get out of their shorts.
Okay. Yeah.
And so once they start covering those shorts, the price goes up really, really quick and they start doing it again. That's why we see that crazy volatility that's going on in the price. But they haven't even begun to cover the number of shorts that are out there. So once they start to cover those shorts, the price is going to go to the moon. And if GameStop does what Volkswagen did and becomes the most valuable company per share, it would put the price at about $30,000 per share. Volkswagen went up to about 20.
How crazy is that, right? Like, especially these people that bought that at like, you know who I want to be? I want to be the GameStop employee who like 2 years ago they were like, yeah, you know, do you want to buy some company shares for like $5 a share? And they were like, yeah, sure, I'll buy a share a week for the next 10 weeks at $5 a share. And then that guy's gonna like, you know, retire on his yacht.
there, and you're right that there's some really good. I've you know, just, you know, looking at that subreddit, you know, it's like seeing some really good stories about some folks who have already sold out and sold their shares to say, I can finally pay back my mom, or I can finally pay off my student loans. I can.
So you know what's really cool? I read this one just today. Is so one of the guys on the subreddit, and this is substantiated. They did the proof chain on there. So he was up huge, sold some of it, went to GameStop. So the company that we've all been sort of backing went to GameStop, bought like 5 Nintendo Switches, and then brought them right down the street to a children's hospital and was like, here you go. So that's the difference, right? This is when money is in the hands of the little guy, the retail investor, we do stuff with it. We give it to other people. We buy things, as opposed to the Wall Street fat cats who are like, let's just make the bank account much bigger.
Yeah. Yeah.
I've become a lot more hating on Wall Street in the past week.
I know, like we have, you know, for the viewers and listeners, we have a chat. We chat through all week, and, you know, sharing information and things like that. And there was, you know, that 1 cent when Robinhood closed trading, it was fumes. You know, it was like you guys were fuming about that, or but JP, you're saying, man, hold on, just hold it, hold on.
Just don't sell. Just don't sell. That's all it takes.
I got scared last Monday. I sold like 3. I bought like 3 shares and I sold them, and I made like $10 each on them. So now I'm kicking myself.
Paper hands.
So when we first started talking, I tell you, when we first started talking about doing this show, I was going to be the guy who was like, okay, I'm more aggressive and I'm a little more conservative with my things. You know, Mike, and Mike, you're going to be the conservative guy, and JP is going to be the aggressive guy. But now it seems like I'm the shy one when it comes to that stuff. Like, I always look at the long game stuff where I just good on you guys. I know that
there's a time for the long game, right? But you kind of have to seize opportunity. This what's happening right now is not going to be possible again. Even with the rest of the things that are heavily shorted. Like
the risk to reward to me is worth it. If I lose it all, just the statement it makes is you know, there's 2 sides to this investment here. One is sort of intangible, you know.
Yeah. So tell me though, but you're talking about, and so let's jump in. We're near the end. So we have our last segment talking about what is our what's your picks for next week. So go ahead, Mike. Do you want to go first? What's your picks for next? What's your picks for next week?
For next week, I mean, I think the story is still GameStop, right? Mm-hmm. Even at right now on my Robinhood app, it's $312 a share. Even being conservative, it's gonna. I think it'll hit 1,000. So I think that's one of my picks. And then I've got another pick. I've got is I'm torn. It's either it's BlackBerry. I think BlackBerry is another one that's in a position to really kind of. It probably won't be as big and scary as GameStop, but I think it's gonna pop pretty big.
Okay, JP, what's your picks for next week?
Well, GameStop, of course. The only other stock I think that's really going to do too much next week is AMC, and actually I'm gonna close out all of my positions and everything else and hold cash for the next week to see what happens. the amount that GameStop goes up is going to be sucked from the rest of the broader markets. So those hedge funds, as they have to pay out those puts, they're going to need to liquidate their long positions in other places, and that's going to come from the rest of the stocks across the market. So I think the smart move is to pull out and hold cash, and wait, and then use this as a buying opportunity once those shorts are covered.
So I think the shorted stocks, though, like
any of the shorted meme stocks right now are going to fly for sure, and I'm going to stay in those positions. But my longer positions, some of my ETFs and those things, I think I'm going to pull those and hold cash for the week and buy the dip.
Yeah, I think I'm going to drop out of my Peloton and my Peloton stock and save that cash for when something goes to the floor.
Yeah.
This has the potential to sink the stock market another 2,000 points, I'm sure.
Like, it's just of course it would be a subreddit that destroyed the market. Of course it would, because that's the way the world works.
I mean, long term,
so
I'd
your
like
recommendation
to see,
then, like for instance, like some of my long, the ones that I'm holding that are long ones, like my Microsoft and Netflix. You're saying sell those.
Mm-hmm.
That's
you're going to be able to buy them at a lesser.
Sell them until end of the week, beginning of next week.
Yeah,
you know.
Anything long, I'm going to sell because I'll be able to buy it at a discount.
Yeah, you'll buy back more for the same money.
But here's the thing that I'm wondering about, though, is like if you sell those, you're going to get taxed on anything you sell.
Well, no,
not really,
because you're going to get taxed on your gains no matter what.
Yeah.
Right.
So if you sell them, it's another line in the form, but it's not gonna. Yeah. You're not gonna get taxed on that individually. You get taxed on your gains cumulatively at the end. So if you're
at the end, if you sell it,
So you don't have to worry about that unless you don't want to pay tax, in which case you don't want to make money. Right. So you want to just hold cash.
Then you really should just be a business owner. I've heard that it's easy to pay no taxes if you own a pizza place.
That's not true.
So good. So yeah, and I would say, because your thing is to sell it and then hold it as cash, and then see this is me as the person who's just so shy about that stuff. I'm watching these the Netflix and the Microsoft and what about stocks that are from other countries? They're not going to get hit as bad.
I think I agree with you, and I thought about that. I've got a Chinese battery maker that I'm holding some shares in, and I think I'm going to hold those. I think you're right. I don't think those shares are going to.
They're still trading in the same market, though.
The international markets are still going to sink a little bit because these hedge funds are broadly invested, conceivably. And we're not talking about just the hedge funds that are going to be on the line for this. It's the clearinghouse and the bank that's holding the notes. So this is going to have some broad ramifications across the stock market.
Wow.
And these Redditors, if you read through the comments on Wall Street Bets, are pretty damn serious about holding until they bleed dry. They're talking about this being a movement and a redistribution of wealth. And there's really, aside from some really shady,
money on Thursday,
some really shady actions by the government, I don't think that there's anything these hedge funds can do about it if these folks continue to hold.
Not anytime soon, right? I mean, they could have regulations that
they could force the brokers to liquidate. They could start liquidating people's accounts, but I don't know if that's going to be a very wise move.
Yeah.
Well, that's always been the thing, right? Vote with your dollars. And hey, if you don't like the fact that the Wall Street fat cats run the world, buy GameStop and hold it. Like, go.
So basically it's that this is, so you see, so this is now it's become bigger than just, as you say, making money. And do you see that probably there's got to be finance reform that's going to come out of this? They got to do short stocking now.
I would hope so. My fear is that the only people that are going to get regulated are the little guys. That seems to be the MO of our politicians and our political parties. They're more apt to regulate retail investing to keep people from doing this than they are to really change the system. It's my hunch. If I had to put money on what's going to come out of this, I think it's going to be that. They might spin it otherwise, but.
All right. Well, so last week you said, watch GameStop. It's going to be fun. You said that last week. Is this going to be like this times 2, or this is basically the same journey? This is going to get more dramatic, or
the squeeze has not squoze.
Yeah, the squeeze is not squoze, and so look at not only play the game of watching the price of GameStop go, intergalactic, right? But also watch the background drama, watch what happens with all the trading houses, watch what happens with the government, watch what happens with all the non-corrupt CEOs, I guess, going, yes, let's do this.
The thing is this could go on for several weeks. What's happening, if you look at the short interest, is it's not getting any smaller. So what they're doing is they're not getting out of these positions and cutting their losses. They're actually doubling down. They know it's going to come down, so they're betting more and more and more further and further out in time. As they're doing that, they're paying more and more interest in the hopes that everybody gives up and finally sells their shares. So the longer this goes on, the more potential it has to really wreck the economy, especially as bigger and bigger banks get on the line for credit lines to these hedge funds that are shorted in these things.
I mean, they could be forced, right? They could eventually
conceivably their credit lines are going to get pulled at some point. The numbers aren't going to work out, and when that happens, it's going to be a shock wave. I'm not going to buy back in until after the squeeze squozes, so to speak, because like I said, you don't know where the top is, and all of those gains that are going into GameStop are going to be coming from the broader market.
That's interesting. So you're can you get fractional shares of GameStop if someone says there's no?
No. So what happened with a lot of these apps, and Robinhood included? I after doing some research, I kind of feel like Robinhood may have been a victim in this, as much of a victim as the rest of us. They do sell their outflows, their market data to Citadel, which is one of the hedge funds that are really short into GameStop, which is probably a conflict. But what happened was the volatility of the stock, not just GameStop, but all of the other meme stocks that were going on, and the sheer volume of it as well. When you buy and sell a share, it takes 2 days to settle. So that money is floating in limbo, and Robinhood has to have the credit capacity to hold that while that transaction is settling. And they started running out of money. So that's why they cut trading off to all their highest volume stocks until this kind of settles down a little bit.
Yeah. Well, this is great, guys. So we probably have a lot to talk about that next Saturday too. Tune in. We do live stream. This is on 8 p.m. on Saturdays Eastern Standard Time. Talk to if you have any questions in the chat, and if we think we know the answer, we'll be more than happy to help out. So, but yeah, thank you very much. And once again, this has been another episode of Nerd Stock Talk.